All right, welcome to another deep dive. Today we're taking a magnifying glass to Lupin Limited.
Woo, exciting.
Right. Their latest financial report, hot off the presses, unaudited results for the quarter and half year ending, get this, September 30th, 2024.
Fresh.
Super fresh.
Yeah.
And we're going straight to the source, their filings.
No funny business.
None, just the facts, ma'am. So, ready to see what's really going on with this pharma giant?
Absolutely. We're going deep on this one. Standalone statements,
Yes.
consolidated statements, the whole 9 yards.
I love it. A 360-degree view.
Gotta have it.
I gotta say, just skimming the report, some things already jumped out at me.
Oh, like what?
Phase 1 clinical trial they're doing for something called an ALT1 inhibitor.
Interesting.
Right. Then there's mention of divesting some business units. I feel like we're about to unravel a whole financial mystery.
You know, it's funny you say that because financial statements really are like a company's diary.
Yeah.
You see their ups and downs, their wins, their struggles, even hints of what they dream of for the future.
I love that analogy. Okay, so big picture first. How's Lupin Limited doing financially overall?
Bottom line, they are profitable. That's the good news.
Okay, good.
But gotta look closely. Revenue for this quarter, it's down a bit.
Down, huh?
Yeah, compared to the last one, slight dip, something we'll want to dissect for sure.
A decrease in revenue. See, now that's the kind of detail that could mean totally different things to different people, right?
For sure.
Maybe you're listening to this because you're thinking about investing in Lupin.
Makes sense.
Or maybe you're the competition keeping tabs.
Right.
Whatever brought you here, stick with us. We'll figure out what this all means.
Nuance is key.
Absolutely. So revenue streams, break it down for us. Where's the money coming from?
Most of it, classic, sales income from operations.
Makes sense.
Pretty standard for a company like this. But here's where it gets kind of spicy.
Ooh, I like spicy.
Remember that phase 1 trial I mentioned?
Yep, the melty one, whatchamacallit?
That's the one. Last year, Lupin got a hefty chunk of change. Milestone income, they call it. AbbVie, big pharma player, basically a reward for hitting a certain stage in that trial.
Hold on, so they got a bonus just for progress? That's wild.
It is. And it kind of messes with comparing this year's revenue to last year's. Throws things off.
Ah, so it's like a one-time bump that's skewing the picture.
Exactly. Got to keep that in mind.
Duly noted. Okay, but revenue's only half the equation, right? What about the money going out?
Expenses. Crucial, my friend. And Lupin's had some big happenings affecting those this year.
Like what?
Well, for one, they settled a legal dispute about their drug, Glumitze.
Uh-oh, legal stuff, that can get pricey.
No kidding, but there's more.
More.
They transferred their generic business in India, moved it to a subsidiary, and shifted some manufacturing and R&D operations to different subsidiaries.
Wow, they've been busy rearranging the furniture.
Yeah.
But how does all this moving and shaking affect, their bottom line?
Well, for starters, you get what are called impairment charges.
Impairment charges. Sounds ominous.
Basically, when an asset's value takes a nosedive, God acknowledge that loss.
Right, makes sense.
But beyond the immediate hit, these moves, they might signal something bigger, strategically.
This is where it gets juicy. We're not just talking numbers now. We're talking strategy, long-term plans.
Are they streamlining, trying to be more efficient, or focusing on areas with more growth potential?
Ooh, good questions. Okay, so they're profitable, but there's this revenue dip, and they're doing all this restructuring. To get a clearer picture, let's zero in on that profitability, shall we? I'm seeing profit before tax, net profit after tax, both positive.
Good signs, definitely.
So they're in the black, but we also got to factor in those tax expenses, right?
Absolutely. Current, deferred, all that jazz, they play a big role.
Taxes, always got to think about taxes.
Yeah,
So even with good profits, a company needs to manage that side of things well.
no doubt.
To really understand how Lupin's doing on that front, I think we got to shift gears, look at their cash flow.
Cash flow, the lifeblood, you
Yeah.
know, shows how a company is generating and managing its cash.
Vital signs, basically.
Exactly. Key for long-term survival and growth.
All right, let's crack open Lupin's standalone statement of cash flows. Lays out where the cash is coming from, where it's going.
Yeah.
What should we be zeroing in on here?
3 main types of cash flow: operating, investing, and financing. Operating, that's the cash from their core business.
Got it.
Investing shows where they're putting money, like equipment, other companies. Financing, that's how they're getting money, loans, stock, that kind of thing.
So each type tells a different part of the story, paints a picture of how they're handling their money.
Precisely.
Oh, and there's this interesting bit in here about a dividend payout. got approved by the company's members?
Oh, yeah.
Investors always watch those closely.
For sure. Shows they're sharing profits with shareholders.
Good sign for potential investors, I'd imagine.
You bet.
Okay, so up to now, we've been all about the standalone statements, which is Lupin Limited specifically here.
Right.
But I'm curious, how are they doing as a group with all their subsidiaries and whatnot?
Great point. For
Right.
that, got to look at the consolidated financial results. Specifically, the segment information breakdown.
Which tells us.
How each part of the business is performing.
And I'm guessing pharmaceuticals is the big kahuna here.
You got it.
Yeah.
But still worth comparing to their other segments. See if they're branching out or sticking to their guns, pharma-wise.
Intriguing. So we've got revenue, expenses, profitability, cash flow, all intertwined. Meanwhile, Lupin's restructuring may be shifting focus. Before we get lost in the numbers, though, got to remind everyone about those limited review reports from the auditors.
Right.
Purpose of those again?
Basically a checkup, make sure the info in the statements is kosher, reliable.
Not a full audit.
Not quite. More like a quick once-over.
Makes sense. Important because we're not just taking these numbers at face value,
Yeah.
right? We want you, dear listener, to understand them, draw your own conclusions.
Empowering stuff.
Totally. Okay, before we move on, I got to ask. We've seen Lupin doing this major restructuring, but what's it all for? What's the end game here?
$1 million question. No crystal ball, but we can look for hints, right? Divesting some units, transferring others, streamlining, focusing on what they do best, targeting high-growth areas.
Like they're clearing the runway for takeoff.
Yeah.
But where are they headed?
Maybe anticipating changes in the pharma landscape, or got some bold new vision, the possibilities.
This is getting good.
Yeah.
We started with the revenue dip. Now we're talking strategy and aspirations. And this is just the beginning.
Buckle up.
Stay tuned, folks. We'll be right back with more Lupin Limited Deep Dive action. Welcome back to the Deep Dive. Before we took a little breather, we were getting into some really interesting stuff about Lupin Limited's financial picture.
Lots to unpack.
Totally.
Yeah.
Remember that revenue dip we were talking about?
Yeah.
Well, things aren't always what they seem, are they?
Not always. Remember that milestone income from last year? The AbbVie deal?
Oh, right.
And we take that out of the equation, compare apples to apples. Their revenue actually shows a little year-on-year increase.
So it wasn't really a dip after all, huh?
Well, depends how you look at it, right?
Yeah.
That's the thing about financial analysis.
Got to have the full context.
Exactly. Peeling back the layers, understanding the nuances. It's like detective work.
Love that analogy. So revenue, when we look at it the right way, it's actually growing.
Uh-huh.
But how does that growth stack up against the rest of the industry? Are they keeping pace or falling behind?
Now that's the question, isn't it? To answer that, we got to zoom out a bit, see where they fit in the big picture.
Okay.
Look at industry benchmarks, see how they measure up.
Right.
And here's where it gets interesting. Their growth, it's positive, don't get me wrong,
Okay.
but it's a tad slower than the average for the Indian pharmaceutical market.
So growing, but
Ah.
not as fast as some of their rivals. What could be holding them back?
Well, lots of factors could be at play, you know.
Sure.
Remember all that restructuring we talked about?
Yeah, the moving and shaking.
Streamlining, divesting, that can cause some hiccups in the short term, even if it's good for them long term.
Like hitting the pause button to focus on something else?
Kind of. But how do we know if they're focusing on the right things?
Good question.
Well, let's dig into those different business segments. Pharmaceuticals, that's their bread and butter, of course.
Yeah.
But their other segment, APIs, other healthcare products, that's showing some impressive growth.
So they're not putting all their eggs in one basket.
Smart move, diversification, especially in such a, unpredictable industry.
Makes sense.
Mm.
But with all this restructuring, the potential shift in focus, how's it affecting their profitability?
That's the key, isn't it? Looking at their profitability ratios can really tell us a story.
Okay.
Profit before tax margin, for example, how much profit they're making on each dollar of sales,
Yeah.
that's stayed pretty stable.
So even with all the changes, they're still making a decent profit.
Yep, seems like they're making smart choices, operationally controlling costs.
Right. And speaking of costs, what about those impairment charges? Those must take a bite out of their net profit.
They did, reflecting the adjustments they made to certain assets.
Right.
But important thing to remember, those are non-cash expenses. No actual money going out the door.
Ah, so it's more of a paper loss.
Kinda, yeah. Easy to get fixated on the numbers themselves, but gotta understand what they actually mean.
Absolutely. So those charges might look scary on paper, but they're not necessarily a sign of financial trouble.
Exactly. Context is everything. And speaking of context, let's circle back to that cash flow statement.
Okay.
We talked about the different types of cash flow, remember?
Operating, investing, financing.
Now let's see how those flows have changed over time.
Good idea. Especially interested in that cash flow from operating activities, their core business. How much cash is that generating?
You got it. And if we look back over the past few quarters, there's a definite trend upward. Steady increase in cash flow from operations.
That's good, right?
It is. Their core business is healthy, pumping out the cash they need to keep growing.
So they're not just surviving, they're thriving.
You could say that, and investors, they love to see that strong cash flow from operations.
How's that?
Well, it means they're more likely to weather economic storms, invest in new opportunities, keep their shareholders happy, all that good stuff.
Okay, so we've got profitability, we've got actual revenue growth, strong cash flow from operations.
Yeah.
They're diversifying their portfolio, restructuring, setting themselves up for future growth.
Sounds like they're making all the right moves.
I'd say so, but there's always two sides to every coin.
Oh, absolutely.
Every company has its challenges, right?
Yeah.
What are some of the risks Lupin needs to watch out for?
Well, for one, they're pretty reliant on the U.S. market.
Okay.
Any changes in regulations there or pricing pressures, that could really shake things up.
Right, they're not operating in a vacuum. External factors can definitely come into play.
And internally, there's the debt.
Tech, huh?
They've taken on a fair amount to finance acquisitions, expansions, all that.
So they're walking a tightrope, got to generate enough cash to pay off that debt while still investing in the future.
It's a delicate balance. But here's the thing. Their credit ratings are still pretty good. Lenders still believe they can handle their debt. That's a positive sign.
Okay, so maybe they're managing the risk well.
Seems like it. That's what I love about this kind of analysis. It's not about sugarcoating or fear-mongering.
It's about seeing the whole picture.
Exactly. The good, the bad, all of it.
Makes sense.
Yeah.
Okay, but we can't forget about the big picture, the world outside Lupin, right? What are the big trends out there in the industry, the economy, that could affect their performance?
Now that's a great question, and that's exactly where we're heading next. We'll be right back after a short break.
Welcome back to the Deep Dive. We've been really getting into the nitty-gritty of Lupin Limited's financials.
Yeah, lots of moving parts.
For sure. But remember, numbers only tell one side of the story, right?
Uh-huh.
We got to zoom out, see how they fit in with everything else that's going on.
A big picture.
Exactly.
Mhm.
Industry trends, competition, the whole landscape. What's the scene out there?
Well, one of the biggest things gotta be the rise of generic drugs.
Makes sense. Everyone's looking for cheaper options these days.
Right. Healthcare costs are, well, they're not exactly going down.
Not at all. So governments, insurers, everyone's trying to make meds more affordable.
And that puts generic drug makers like Lupin in a pretty good spot, potentially.
Yeah, if the demand is there, they could be sitting pretty. But what about the competition? How crowded is that space?
Oh, it's a jungle out there. Tons of players, big and small, all fighting for a piece of the pie.
So it's not just about riding that generic drug wave. They got to stand out somehow.
Absolutely.
How are they doing that?
Well, a couple of things. They're really pushing into emerging markets.
Smart, going where the growth is.
Exactly. Growing populations, healthcare spending on the rise, lots of potential.
But new territories come with new challenges too, right?
Oh, for sure. Different regulations, different ways of doing things.
Got to be adaptable.
And they got to make sure they can actually get their products to those markets, the logistics.
Right, got to be able to deliver. So high risk, high reward kind of a thing.
You got it. But that's not all they're doing.
Oh. What else?
Innovation, big time. Investing a lot in research and development.
Not just copying the brand name drugs, they're coming up with their own stuff.
Not just copying, no. New formulations, specialty pharmaceuticals, pushing the boundaries.
Ambitious. But R&D, that's got to be expensive.
Oh, yeah.
How are they funding all this?
Remember those financing activities we talked about?
Debt, equity, all
Yeah,
that.
using a mix to keep things moving.
So they're borrowing some, getting
Yeah.
investments from shareholders, smart. But let's not forget about the government regulations.
Doesn't escape those.
How's that whole landscape looking for them?
Well, government policies, they're like the wild card in this industry, you know?
Make or break.
Especially in big markets like the U.S., any changes can really throw a wrench in the works.
So they got to stay on their toes.
Always.
What are some examples of how those regulations are affecting them specifically?
One big one is drug pricing. It's a hot topic everywhere.
Makes sense. Keeping healthcare affordable.
Right, but also gotta let companies make a profit.
Tough balance to strike.
For sure. Lupin's trying to walk that line, focusing on efficiency, keeping costs down,
Smart.
looking at new pricing models too, maybe even partnerships, make their meds more accessible.
So they're not just sitting back and taking it, they're being proactive. I like that.
Yeah. Gotta adapt to survive.
Now, one last big trend we got to talk about. Technology. That's shaking things up everywhere.
Oh, absolutely.
How's it changing the pharma game?
Everything's getting a tech makeover, drug discovery, development, manufacturing, the whole 9 yards.
Wow.
AI speeding up research, blockchain making supply chains more transparent. It's a whole new world.
What's Lupin doing to keep up with all this?
Investing in digital platforms, streamline things, connect with customers better,
Makes sense.
even exploring partnerships with tech companies, bring in that expertise.
So they're seeing technology as an opportunity, not just a threat.
Exactly. Gotta evolve or get left behind.
Sounds like Lupin is facing some serious headwinds, but they're also going after some exciting opportunities.
That's the name of the game, right?
Totally. Well, I think we've covered a ton of ground today. Revenue, expenses, cash flow, profitability, all while keeping an eye on the bigger picture. The industry, Lupin's strategy. Phew.
It's been a journey.
It has. But this is just the beginning, folks. We've given you the tools, the insights. Now it's your turn to keep digging.
There's always more to uncover.
Exactly. Keep asking questions, keep learning. Who knows what you'll discover? That's all for this deep dive, but we'll be back soon with another fascinating company to explore. Until then, happy investing.